fixed rate versus variable rate for the SBA 7A loan, and that's what we're going to talk about today. So most banks and lenders on the 7A program are going to be a straight variable based on Wall Street Journal prime plus margin. Typically the deal size we're doing, the highest the margin can be is 2.75. Depending on the deal and bank, that's really going to depend on the margin that you're going to be offered. So if it's a very strong deal, we can take it to a balance sheet lender, meaning they're going to not sell off the guaranteed portion of the loan day one. We call those balance sheet lenders. They typically have the best rates. They're a little bit more stringent because they're going to keep that loan on the books, the guaranteed portion. But when they sell off these loans in the secondary market, they sell off the guaranteed portion. They have to have a little bit higher margin to make money. So that's why you're getting a little bit higher rate on most cases when they're selling off the guaranteed piece. So the rates can range from anywhere from 0.5 to 2.75. Most of the time on the low end, you're going to see, 1%. High end, you're seeing a 2.75 margin. And I don't know what the average is. I'd probably do a study on that at some point. Usually in the twos is what I'm seeing typically. But obviously that changes. There's a lot of variables regarding the margins. If the deal is a little bit hairier, certain banks, all they offer is prime plus 2.75. I hardly ever see them going any lower. So it really depends on the deal itself and then the borrower, their financials and how they look. So there's lots of factors going in. I would say that the majority of banks do not offer fixed rate options, especially on business acquisition with no collateral, no real estate. Now, if it's a real estate deal, there's more lenders that will do fixed rate options and offer better terms because they obviously have collateral with this business. So those are the options. But we do have a few banks out there that will do a acquisition or expansion type of financing with no real estate collateral, and they'll do those on a fixed rate option. So it is available. We do place those. The majority, like I said, will be variable rate. So in today's market, whether you're looking to refinance or you're buying a business or you're doing an expansion, it's going to come down to a few factors, and that's really where our team comes in. We help you navigate and figure out what would be the most advantageous scenario for you that's realistic, and we go out and find the best terms for you with the large bank network that we have and lender network, both credit unions, banks, regional community banks, and non-bank SBA licensed lenders. Usually we work with PLP, meaning they're a preferred lender for the SBA program. They can underwrite in-house. Usually they underwrite everything in-house unless the deal has a little bit of hair on the deal, and then sometimes they'll send it in delegated. So SBA actually underwrites it because there's some things on the deal they want to make sure that SBA will sign off on. So that's why they would send it in if they were PLP, but didn't want to do it in-house because of that risk factor to that deal. Hi, this is Bo Eckstein, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link. So the fixed rate options. Now today, I have one bank in particular, and they'll offer two options. They've got really good pricing, and option one would be a fixed rate option for the first 5 years of the term on a business acquisition. So they would do 5 years where the rate would be fixed. And then they also give an option of straight variable, and these are very attractive margins. And so in today's market, people would probably have to think about, does it make sense to go into a fixed rate option, thinking that prime was 4.5 like 2 years ago, and now it's 8.5. And the anticipation would be that the rates would come down. So if they locked into a fixed rate, if the rates dropped enough, they would be losing out. So that would be the variable that you would want to think about, to take the guaranteed fixed rate for the next 5 years, or go variable and then get the benefits if the rates came back down to 6, or I'm talking about Wall Street Journal Prime. If Prime came down, so that would be the option on the fixed rate option versus the variable. So that's really kind of the component. Like I said, if it's commercial real estate involved, then oftentimes that's more probable that we'll be able to get you at least a short-term fixed rate option. So it'd be fixed for the first 3 or 5 years of the 25-year term, if it was deemed eligible for that long of an amortization. On a business acquisition, the amortization is 10 years. When there's commercial real estate involved, it's a component of the value of the real estate versus the value of the business, and they can amortize as long as 25 years. Typically if the real estate is worth 51% or more of the purchase price. It's changed a little bit, the guidelines. Sometimes you'll see some lenders doing 2 notes, a note for the business and a note for the real estate, and some of them will do a blended amortization based on the allocation of purchase price on the business versus the real estate. So anyways, there's lots of options out there, but most of the time you're going to see prime plus margin on a variable term on a 7A. Not always, but if you have a unique scenario or you want some more insight, you can go to bookwithbo.com, and I'm happy to meet with you over Zoom, and we can talk about what you're looking to do and see how I can be of assistance. So anyways, feel free to look around. There's tons of videos on SBA financing, USDA financing, all sorts of business financing. We interview entrepreneurs. We talk about franchise investing, and both as resale and also franchise startups. So we really cover the gamut on entrepreneurship on this channel. So anyways, please like and subscribe, and I'll see you on the next episode. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.